Hello and welcome to another update video about MATIC. Yeah, I thought we start here on the longer time frame just briefly to get everybody, give everybody a good understanding of where the market actually is. And I mean, this is a chart that actually did not make a new bear market low after 22. So it did hold that level, and this level was struck at around 32 cents in 2022. And then we have this 1-2 setup. And the second wave 2 obviously bottomed in October last year. And then, or not the second wave 2, wave 2 in October 23. And then here another 1-2 setup, which bottomed in January 24. And this is also, as per Elliott wave, now the key level against which we can actually focus on higher. It is circle 2. So it's this level at 70 cents pretty much, 69, 70 cents, circle wave 2. As long as this level is holding, the microstructure that you can see here can play out like that and is technically valid. It would take a break really below that 69 cent level to invalidate it. But until then, we can look at a 1-2, 1-2, 1-2 setup. Possible bull market target. I would not be surprised by $10. But first of all, it's important to recognize that, of course, there are some correlations in the crypto space. So if Bitcoin rings the bell and says the Bitcoin bull market is over, or generally the bull market is over, then most likely most altcoins will, maybe with a variation of, I don't know, 2 weeks or so, they will also form a top, and they will not, do another 10x should Bitcoin top in the bull market. That is very important to recognize. Therefore, have a religious profit-taking scheme in play. Follow that. And please also understand always that impulsive structures can also break. But obviously at the moment we are following this pathway. So the idea is that here this wave 2, which we have at the moment, this wave 2, this smaller degree wave 2, should bottom at some point, and then we should see continuation of that rally, ideally before breaking below 70 cents. But there are some support levels before that should actually, help the price to find a reversal point. And we take a look at the shorter time frame now. This is the shorter time frame chart on which you can actually see this 1-2, 1-2 setup that I just discussed. 1-2, 1-2, and there is this 69.70 cent level, this January low. That's the formal invalidation point for the direct upside structure that I showed you. But there is a key support level, the 78.5 cent level, 78.6 Fibonacci retracement. And as soon as we get a sustained break below that level, this more direct 1-2, 1-2 setup will become far less likely. So what we're doing, we're tracking this and we're watching the relevant Fibonacci levels and micro support levels we've defined here, and watch if the price would react there. For example, we have 82 cents, 78.5 cents and 76.7 cents as support. Also here the 87 cent level still isn't broken, but the market has actually fulfilled a microstructure already, and we don't need to go down any lower. We have 5 waves down in wave C. That's actually enough. Now, looking at the structure, however, if we get a break below 78.5 cents, it becomes more likely that we are morphing into the green scenario, which is slightly different. In this scenario, we have a large wave 2 that's unfolding, and the top that was formed in March was a B wave top. That's not preferred at this stage, but it would be in the case, in case we break below that 78.5 cent level. This would be the plan B, the fallback scenario, the last bullish scenario I have left actually on this chart. So yeah, I mean, it's all okay at the moment, it's all okay. It's just that we need to see a reaction in this region. Now let's go to the 1 hour chart. Here you can see the microstructure currently, A, B, C. The C wave to the downside is likely unfolding right now, and the C wave has 5 waves. So that's sort of what we're dealing with. Could be that the 5th wave extends, absolutely. So we need to be prepared. We have next micro support levels at 82.4 cents, 78.5 cents. Ideally, we form a low here in this region. Maybe stretch a little bit further, but it would not be a sustained break then if we just sort of touch 76.7 cents. But I really don't want it to go any lower than that in the yellow scenario. Okay, so if it goes below that, then we're likely in the green count with support between 66.6 and 58.2 cents. Then you might say, okay, what's that about? And the thing is the structure will change. Okay, if we morph into the green count, the structure, medium-term targets will change. And it's also in terms of probabilities for the bullish count will reduce because now we have 2 bullish scenarios that gives more confidence into this uptrend. But when we have only 1 left, yeah, I mean, you lose a bit of confidence, right? And probabilities decrease because we would then introduce also a bearish count. Okay, that's my update about MATIC. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.